Pound will always be the world's...
And the pound is still around. And I'm glad you brought it up, Brian, because remember, there was a time when the pound was the #1 currency. And this is what Americans need to remember.
Yes, and that ended. That's exactly my point.
It ended gradually because there was a superior alternative, namely the US dollar. Remember, once upon a time, the pound was worth $4.86. There was a brief period when it was worth $5. We nearly got down to parity when Liz Truss, the human lettuce, was prime minister last year. So remember, America, it doesn't last forever. It's a slow burn. There were multiple sterling crises that chipped away. Why was that?
So is
slow growth, too much debt, poor monetary policy.
Former SEC Chairman Jay Clayton is here. He's a CNBC contributor and now executive chair of Apollo, American Express board member and senior policy advisor for Sullivan and Cromwell, the Jay Clayton portfolio of life. And Gary Cohn, IBM vice chairman and former National Economic Council director, and of course, Mr. Goldman Sachs during the 2008 crisis. Okay, so what do you guys think of this? Is this what you expected? I mean, I think there were so many people who were concerned after 2008, actually, and the experience that JPMorgan in particular went through in terms of legal liability, that there was a view that actually some of the big banks wouldn't want to touch something like this.
So I'll kick it off. So, look, I think this is what it was expected, but I'm surprised that it took this long to get here.
Right.
In fact, I think one should be shocked it took this long to get here. I think everyone knew that First Republic was in trouble 3 or 4 weeks ago. And the assets just deteriorated. Deposits continued to leave the bank. The bank put out earnings, which the regulators knew what the earnings were long before they put them out. I think it would have been much more prudent for the regulators to have stepped in pre-earnings and try and
So that's actually very interesting.
It was waiting to see what the deal was going to be. The regulators wanted a private deal. The private investors are like, forget it. We want the best deal we can possibly get.
Well, you know, we talked about this. Yeah. The longer you waited as a buyer, the better deal you got.
Exactly.
Right. This was the falling knife.
Which is why we didn't get the press release until 3:45 in the morning.
But should have this been I guess where you're going with this, and I think a lot of people were going with this, is this should have been forced, if you will, 3, 4, 5 weeks ago. I mean, there's some question as to whether this $30 billion program, if you remember when all the banks came together, led by JPMorgan, in fact, should have even happened.
Yes. Look, the question is, have we created the new moral hazard? And the moral hazard now is never buy a bank until it goes into receivership.
But we already knew that after what happened in 2008.
You're going to get a much better deal when it goes into receivership. So, yes, everyone knew that the First Republic was going to transact 3 or 4 weeks ago. But 3 or 4 weeks ago, you weren't going to get loan sharing. You weren't going to get loss absorption. You weren't going to get a line of credit from the FDIC. You were going to have to go in there as an arm's length deal. When the FDIC takes it over and puts it into receivership, it's a whole new deal.
Right. But Gary, wouldn't you say that part of this was lessons learned from 2008, whether that be Bear Stearns or anybody else? Like, why would you want to step in as a big bank knowing all the bad things that happened last time around?
I think this is different than 2008 in some respects, and Jay would have a very strong opinion with that. In 2008, you were taking over mega mortgage servicing portfolios, and the mortgages were the culprit of the time. The issue going on right now was a deposit run and a mismatched duration interest rate book.
Right.
There's a lot less ramifications from a mismatched duration and interest rate book than there is in originating mortgages that maybe should not have been originated. There's a much longer tail on it.
Becky's right. The structure of this deal has embedded in it the lessons of 2008. They structured the deal to avoid some of those liabilities that basically came along in unexpected liabilities.
Well, let's talk about those liabilities. Are there legal liabilities that come with a transaction once it's in receivership? Which is to say, effectively, can shareholders, can individuals, can the government or governments, agencies sue you, meaning JPMorgan, over things that happened at First Republic over the last decade?
Okay, that question was litigated coming out of 2008, and as usual in the world of what I would say is legal liability, facts and circumstances matter.
Okay.
So, but you can tell here that this was structured, and it should be structured to avoid those things.
So you think those liabilities are now off the table?
If you want a buyer to come into these kinds of situations and do due diligence in the space of 3 or 4 weeks, you can't say, oh, by the way, you've got to take as is, where is, including all of the liabilities. Otherwise, what's the price? If you have to discount for those liabilities, the amount of support that the FDIC is going to have to come up with is going to be much larger.
You made a note to yourself. What was the note?
No, it has nothing to do with this topic.
Okay. No, but I
was thinking about
he's always a step ahead.
One step ahead.
He's always
one step ahead.
But I was just, do you think there's legal? I mean, we don't know that there's no legal liability.
We don't know that there's no legal liability, but let's just take a step back. Should the buyer be assuming legal liabilities in these kinds of situations? Because it will skew the price lower by a substantial amount more than the expected legal liabilities.
I have a strategy question, which is to say, the bank, JPMorgan, saying this is going to be accretive to them. I think, frankly, minimally accretive to them.
Yeah.
Do you think that this is actually a good deal for them? And the reason I ask is a lot of deposits, frankly, were already going to JPMorgan, right? They were already there. They don't really want to be in the super jumbo mortgage business. In fact, they've sort of gone away from that business. To the extent that it's going to help their wealth management business, they already have a pretty healthy wealth management business. How does this help them relative to a PNC or, Bank of America, it sounds like dropped out probably, I think, on Saturday. But how do you think about sort of what this does or doesn't do to the bank?
I think it's a good deal for the system, right? And if you're...
I don't disagree with that. I'm saying a year or two from now, our shareholders of JPMorgan are going to say, I'm so glad that JPMorgan and Jamie Dimon stepped in, or are they going to say, I prefer they wish they did?
Andrew, relative to the size of JPMorgan today, this is not that relevant. I don't think shareholders are going to notice 3 years from now. You're talking about a multi-trillion-dollar bank buying a bank with $100 billion of assets. It's a really small transaction.
Maybe on the wealth management side.
Do you see? You say maybe on the wealth management side?
Maybe on the wealth management. Look, First Republic had a great wealth management franchise, great connections.
But the question is, does that wealth management franchise hold up? You can't offer them.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, you cannot make this stuff up. The FDIC video that I did had Jay Clayton and Gary Cohen in. And they're on CNBC acting like it's a surprise, when we clearly have Gary Cohen saying in the FDIC meeting that he doesn't think the people deserve the right to know what's going on. And the FDIC stated they wanted the failures to happen on Friday, so therefore they have enough time to implement the plan. And then we get on Monday that JPMorgan is going to be taking over First Republic. Again, guys, you can't make this stuff up. The people are asleep. They're distracted on things that don't matter when the truth is sitting right in front of their face. And we know not only was Jay Clayton a part of this FDIC meeting, but remember, guys, he started the Ripple versus XRP case. And that allowed Gary Gensler, the NWO chess piece, to kick regulation down the road. And guys, tomorrow the Fed starts to meet, and on the 3rd, and Jerome Powell will let us know whether they're going to be raising rates. We know he's going to say they're going to be data dependent. And then we also have the EU going to be raising rates also and running off the balance sheet. Remember, guys, it's a global effort to destroy this legacy market, this fragmented world, in order to bring in the 4th industrial revolution. Whether robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. But we know first, guys, we have to have the distractions, so then therefore the NWO can pull off the magic tricks that will lead us into the crisis. But unfortunately, Bitcoin and crypto are going to take the blame as these smaller banks crumble. And guys, we know who's doing it. That's right, the Fed. But unfortunately, the masses are asleep. And that's the reason why they don't teach finances or about the Federal Reserve in school. Because if they did, it would never work. But now the NWO is done with this system. Now it's time to take America to Babylon and also the United States dollar down and give the rise to the emerging markets, led by China, the dragon with that digital yuan backed by that digital SDR. And in the media, the headlines say JPMorgan saves the day. And guys, we know JPMorgan is building Federal Reserve 2.0 on blockchain. So even though it's going to be an illusion like Bitcoin and crypto, it's going to be headed down. It's going to rise like the phoenix. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order. It's all planned out. You have a wonderful day.
Probably should have some pause, but I'm not sure that it will. They've given every indication that they're going to continue to raise interest rates. Their prime objective is to get inflation under control. I just came back from Europe, and the ECB is sending the exact same signals of, we've got an inflation problem. We're going to continue to tighten policy despite the banking stresses that we've seen there as well. Less so and centered in Switzerland there, but still the same kind of messages. So I'm not sure that we're going to get a change in view, but maybe we should, because this is now we've had the second largest bank failure in our history, and the third, all within a couple of weeks' time. Mm-hmm. And to the point Rick was making a little while ago, should we assume that this is it? Why can't this go a little bit longer? If for the people who remember 1994, the Fed raised from 3% to 6%. By the end of the year, Orange County was declaring bankruptcy. Mexico was in crisis. You had derivative books and bond books on the street that were all blowing up. So, is this it? Hopefully, but we shouldn't assume, especially if the Fed is going to continue to push policy tighter.
Point. I think that's the key point you just made, because there were other banks in there over the weekend. And if you think about it, at the end of the day, ultimately what the FDIC chose here is to allow JPMorgan to take over more than 10% of the deposits of the United States of America. So there was a special exemption there. That tells me that it was a little bit of a desperation situation where I guess the bids from U.S. Bank Corp and PNC were so low. In other words, those banks are not really, I don't think they were strong enough. I mean, our clients, a lot of our clients around the world don't think those banks were strong enough to do this deal. So at the end of the day, you had to go to Papa Jamie and put more than 10% of deposits of the United States of America into one bank. I mean, it does speak to the situation, I think.
You've mentioned Coinbase. It's having this regulatory fight with the SEC that really ratcheted up last week. And so there are some concerns among investors that if there are more draconian rules coming down the pike, that it may, be a headwind for the sector. That being said, the banking crisis, typically a good thing. So First Republic may also have some bearing on price moves this coming week.
All right. Speaking of the banking crisis, obviously our big news today, First Republic Bank being taken over by JPMorgan. How has the banking crisis impacted the cryptocurrency market? A lot of us have been watching cryptocurrencies since the collapse of Silicon Valley Bank.
Right. And I mean, you look at a chart of the price of Bitcoin and other cryptocurrencies starting from March 10th, when we saw a lot of the problems begin with Silicon Valley Bank. And it's just been this upward trend. Bitcoin gained 22% in March alone. And part of that has to do, at least the bulls would say, with the fact that there's this erosion of confidence in the traditional banking system. And then they see cryptocurrencies, these decentralized currencies outside the reach of any sort of intermediary as potentially being a safe haven play. I mean, you even look at Bitcoin against bank stocks, the KRE, against the NASDAQ 100, represented by the triple Qs, and it's well outperforming since March 10th.
Yeah, we're looking at the Bitcoin chart right now. You see the big spike. You see a little dip right before March 10th, and you see that huge spike and a move to the upside since then. So I really want to drill down on this. We're hearing more and more about tightening credit conditions, possibly a rate hike, and that whole cost of capital, turmoil in the financial sector. Is that a net headwind for Bitcoin and for other cryptocurrencies?
Yeah, you mentioned at the top of the show, we're getting a decision from the Fed in the next few days. And that always has one of the biggest effects in terms of outsized price movements in Bitcoin and the wider cryptocurrency market, because those macroeconomic data points, those moves by the Fed absolutely ripple into the price of Bitcoin. And one thing to mention here, Frank, when Silicon Valley Bank closed, so did Silvergate and so did Signature, two major crypto-friendly banks. And with it, a lot of the liquidity fell out of the crypto market, which means that if you've got a bullish buy, that's great for the price of Bitcoin. But if you've got a bearish buy or you've got people selling, then you're seeing outsized prices moving lower.
I want to focus on one of the companies you cover. You mentioned it earlier, Coinbase.
Yeah.
Why aren't we seeing positive price action for Coinbase? Generally, in the past at least, Coinbase kind of traded in line with cryptocurrency, specifically Bitcoin. Bitcoin up big, but Coinbase taking a dip to the downside. I
mean, it's such a great point. And it really goes to this legal fight being waged between the SEC and Coinbase. Coinbase sued the SEC on Monday. They have a Wells notice from the SEC, meaning that formal suit from the SEC against Coinbase could be coming. And the worry here, Frank, is that there may, they may be forced to register as a national national securities exchange, a clearing agency, which could mean they would have to jettison their customer-facing business. That's a huge headwind for this business. And it is funny because you do typically see upward price movements in the crypto market tracking with those crypto-focused companies, and there's been a huge departure.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam save the village. Part 2. King Joshua and Drama Tam save New York from COVID stories 3. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.